Good Thursday morning from Yahoo Finance's New York City headquarters studios. I'm Yahoo Finance Executive Editor Brian Sozzi. I've been lurking on our Yahoo Finance live blogs, which you can find at the top of our homepage all morning, just digesting a ton of headlines. Snap shares are ripping higher as it inked a $400 million deal with Perplexity. Perplexity's search capabilities will appear in the chat interface starting in early 2026. Nothing disappearing there. Big day for Tesla and CEO Elon Musk as the vote on his $1 trillion pay package comes to a head. Finally, and I'm also stalking the Yahoo Finance trending ticker page for market clues. The theme of investors selling on good news due to valuation fears continue. Qualcomm and energy drink maker Celsius under pressure after decent quarters, respectively. Let's get to NASDAQ and check it with our very own Brooke DePalma. Brooke.
Good morning, Brian. Right now we're seeing a pretty muted reaction here at the open. We do have the NASDAQ moving just ever so slightly lower, down about around about 0.2%. We have the S&P 500 also moving lower as well, down about 0.1% as well, 0.15. And then we have the Dow down roughly flat at the open here. So not too much action to start, but we are seeing some big trenders on our site with some large moves. Do you want to take a look at Duolingo? That stock opening down about 26% at the open after it projected softer than expected bookings forecast for the fourth quarter. We also have Snap, which you just said announced that partnership with Perplexity. That stock still soaring at the open, up more than 15%, nearly 16%. Celsius, I know one of your favorites, Brian. That stock still seeing some downward momentum this morning, down nearly 19%. And if it's still trending on our site, I also want to take a look at Elf Beauty because that stock definitely caught my attention on Wednesday after market close. It's now trading down more than 24% after they projected a weaker outlook than what the street had expected. And the CFO said that largely has to do with these tariff implications if this 45% does remain on China. So definitely keep a lookout for that. Taking a step back, though, at the NASDAQ right now, we do have mostly in the red, but some momentum ever so slight from NVIDIA, Google, as well as Broadcom, as well as Marvel and others like AstraZeneca opening in the green this morning. But a pretty muted picture right now on the street. Once again, taking a look back, all three major indices roughly flat at the open, and so we'll definitely keep a close watch to see how the movement holds up as we make our way into today's trading session.
Brooke, solve this one for me. Is it ELF or ELF? How do I say this company's name?
I always say Elf Beauty.
Okay, that's what I say. So I'm going with you, Brooke. Talk to you in a second. Appreciate it. All right, here's what is top of mind for me this morning besides ELF. It's not my usual tidy list of things to watch. Nope. It's this one theme. The disconnect between the markets and the average human being. This is what I mean. Robinhood's third quarter results were, for lack of better terms, mind-blowing. Sales up 100%, EPS up 259%. You have to give a hat tip to co-founder and CEO Vlad Tenev for driving a major reinvention of this platform. Company is pushing hard into prediction markets, banking, and cards. He has told me throughout the year he has a big, ambitious plan for Robinhood's next decade, and all indications point to him delivering on these. Robinhood's great reinvention, of course, comes alongside stock prices sitting at a record, ditto crypto to a lesser degree. Both of those factors have helped power Robinhood's results this year, while Coinbase has cashed in on the crypto boom. The retail investor is very much engaged like never before. But it doesn't appear the great boom in asset markets is directly lifting many households to new heights. While you had Chipotle CEO warn last week of young consumers not buying $20 burrito bowls, Costco said last night SNAP benefit uncertainties are weighing on its higher-end shoppers. So as the government shutdown especially is also weighing on Costco warehouses around the D.C. area. The employment component of the ISM services report on Wednesday was mixed at best. Lots going on here. So what's the trade here for investors? Here on my opening bid roundtable, Jonathan Gollum. Haven't seen him in a while. Good to see Jonathan. Seaport Research Partners Managing Director and Chief Equity Strategist, alongside Yahoo Finance Senior Reporters Brooke DePalma and Inez Ferre. Jonathan, really good to see you. It's been a bit. Congrats on your new firm. Let's talk about what I was just mentioning on Robinhood. Really the epitome of all the bullishness we have seen in markets. How much longer can this continue? Hard question, but maybe not so hard.
Well, I don't think it's a hard question. There's this desire to say the market's up big. There must be a lot of speculation and therefore, things look expensive. But in reality, the markets are up because earnings are up. If you look at, the suite of tech companies, which is about 45% of the market, they're up 27% this year, which is an enormous number. 22% of that 27 is in better earnings. And so as long as the underlying businesses that are driving these stocks are doing well, and there's all indications they will, then the market goes higher. The other thing you were mentioning Robinhood, but the financials are experiencing terrific success in this environment. The financials I think are growing year over year at something like 23 to 24%. The rest of the market, and you're talking about what about the general households? Typical consumer stocks, typical industrial companies, energy, staples, and the like, they're up only 2 to 4%. So it's really two entirely separate stories driving the market.
And as at the core of results out of Robinhood, and of course, like I mentioned, Coinbase about a week ago, a strong quarter of their own, it's crypto. We've seen crypto move up and to the right pretty much all year. It's had a pullback the past 2 weeks, but by and large, this is going to likely go down as a very good year for all things crypto.
100%. I mean, Robinhood is crypto trading revenue was up over 300% year over year. They have tools like crypto staking, Bitstamp. That's the exchange, the European crypto exchange that they acquired last year. That's integral to their push into Europe. Tokenized stocks in Europe, those products that they're offering there. I mean, they are firing on all cylinders when it comes to crypto. And I will say that also their banking rollout as well, those banking features as well. I mean, I was talking to an EY blockchain analyst yesterday that was telling me crypto platforms are becoming more like banks. Banks are becoming like crypto platforms. This is the sort of vision of Robinhood. In 10 years, they want about half the revenue to come from outside the US, and they want everyone to put all their assets into their wallets, their Robinhood wallets, and to be investing and saving and everything all in one place. And these are some of the features that they've been one after the other rolling out over the last year. And this is why you're seeing the stock. It's been the best performer of the S&P 500 this year, and it was just included in the S&P 500 in September.
Inez, you got a lot going on. You're stuck on the show with me every day. You're ordering Costco frozen pizzas. I know you're a big fan of that. Talking to EY blockchain analysts. I didn't even know EY had that as part of their business. Brooke, I know you're following what Robinhood has done for prediction markets. They were really talking a lot about this on the earnings call. Another key area of growth for them, and it sure sounds like it could be a big business. And again, epitomizes everything we have seen in the markets this year.
Brian, I think this is really important for Robinhood as it establishes itself in the prediction markets. Vlad kind of saying on the call that prediction markets are really on fire, and Robinhood really taking hold of where they stand within this market, especially as Polymarket is getting ready to re-enter the U.S. And on their call last night, he went on to say that they entered this during the presidential election just last year. Now they doubled volume every quarter since then to 2.3 billion contracts in Q3. And in the month of October alone, that was up to 2.5 billion contracts. And it's not just sports, he said. It's economics, it's politics, it's culture. They really love being early to this new asset class. And they said that it's a massive opportunity with different assets. Also, Bernstein really holding importance to this as well. They said that prediction markets could be a large business for Robinhood. That's not even in the current estimates just yet. And once again, this is important for Robinhood to really establish itself as Polymarket re-enters the U.S. And as you could see here, Robinhood needs to keep the momentum going. It's up more than 267% year to date. And so these new welcoming of these new different opportunities for Robinhood really seems to be a key driver of this momentum here.
Jonathan, you've seen a lot of cycles in your time covering markets. What do you make about some of these new tools like prediction markets? Is this a good thing for markets overall?
I mean, more information is always better. I'm not sure whether the fact that people can wager on them, I'm not sure how to handicap or think about that. But I will tell you that for me to be able to say, how are people viewing an election? How are people viewing an outcome of some type of an event is extremely helpful for me in making all kinds of decisions. And when a bunch of economists or academics make predictions, it's one thing. But when people are putting real dollars in place and you're doing it over an extraordinarily large number of people, there's really useful information to me as a strategist and to a lot of investors. As a business, it's not, I don't, it's not really my area of expertise in terms of looking at what the revenue potential is, but it's, in terms of the economy and the kind of jobs that people like me do, super, super helpful and useful.
Jonathan, let me stay with you here, and tie it back to our theme, at least for the top of the show here. Wall Street doing well, stock prices near record, crypto doing well. Why hasn't that necessarily translated into the middle-income consumer?
First of all, it's really interesting that if you look at the jobs data and then you look at the last couple of quarters of GDP, or last quarter and what's expected for the third quarter when these numbers finally come out, the economy as measured by GDP is really strong, and the job situation is weaker. Demand for labor is weak, and because of less immigration, the supply of labor is weak. So it's a little bit strange that these things are so at odds with each other. But I think from a market's point of view, you have to. The market is a list of companies, and they right now are dominated by companies who are the purveyors of a bunch of really exciting new technologies, and they are changing the way that we do things. In many ways, this is like the introduction of cars or railroads or telecommunications in their era, and we're seeing, the way that the economy functioning is changing in front of us, and those that are providing those services are doing extraordinarily well, and that's what's driving markets. If you look at, and I mentioned earlier, if you look at, just general retail behavior or consumer behavior, it doesn't look overly inspiring. If you look at industrial activity for things that are really driven by the general economy, doesn't look overly inspiring. And the financials, and we're mentioning before, a lot of that is money is, the Fed is lowered rates and expected to do more so. Credit spreads are down. All of this, and M&A activity is up in a really big way. All of those things are terrific for the financial sectors. So it's not one story in the market. There's 500 companies in the S&P, and they each have different dynamics.
Brooke, where I have not been inspired is on the consumer. Chipotle last week, red flag. Kava's numbers were okay, but didn't blow my mind. Costco had a good October, but Citi is out with a note this morning talking about how when they call management back, they were calling out weakness related to SNAP benefits. I didn't like any of it, and I can't imagine when we get these retailer results in a week or two, they're going to be any better, especially from a Target, which has already been struggling.
Yeah, Walmart and Target expected both to report the week of November 17th. And what we're really looking at here is this consumer that's extremely choiceful. And that really resonated in some recent data I got just this morning from Bank of America. They said that total card spending per household was up about 1.2% year over year during the week ending November 1st. And they said that basically entertainment, electronics, clothing, online, that accelerated. But what didn't accelerate is how consumers spent on things like furniture, restaurant and bars, and department stores. And this really just gives us, Brett, some more insight into this customer who's not going necessarily to Chipotle and Cava as much as they were last year, but really is sort of sticking to the basics, maybe what exactly they need to have, especially as you make your way towards the holiday season. But yet, when I talk to many sources, they do say that this consumer will continue to spend into the holiday, even some now projecting positive sales growth year over year for this holiday season. But keyword, yet again, choiceful, selective. They're really picking and choosing where they want to go these days.
And Inez, I'm going to put myself in that category as being choiceful. I went to the bar 2 weeks ago. I got hit for $21 for one drink. It was a mixed cocktail. I mean, are you kidding me? I didn't order another one.
Hey, can I just jump in on this issue, though? The Fed's responsibility is not growth and inflation. It's jobs and inflation. And if we have a situation where the consumer looks a little bit weak, you talked about them being choiceful and the like, that means that the Fed is likely going to do more, and that adds to the supportive environment. So if you have a group of really healthy companies that are in the S&P 500 or the broader market, and then you have a slightly weaker consumer that needs more Fed support, and we got it in the October meeting, and we're expected to get more of it. That's an incredibly positive backdrop for the broad market, even though the consumer's weak. They're very different forces.
Inez, I'm just going to need the Fed to cut rates to 0% to buy that $21 drink.
Yeah, look, they are flying blind without much data, but there is that private data that's coming out, like the Challenger report that came out, the most job cuts in October in more than 20 years. That does not bode well for the economy, and that raises the bet that the Fed will likely lower rates in December.
All right, let's keep it moving here. A big thanks to my opening bid roundtable, Jonathan Gala, Brooke DePalma, and Inez Ferre. Appreciate it. All right, we're nearing a big day here at Yahoo Finance. It's just so big. Our annual Invest event. Our teams haven't slept in months as we have put this special one-day investing celebration together on November 13th, starting at 8 a.m. from our New York City studios. We got a special full day of live global coverage of the key themes driving the market, AI, crypto, and much more, with the top people in corporate America you'll want to hear from. We'll be talking to Robinhood co-founder and CEO Vlad Tenev right after his big quarter. We've been talking about all morning long. Questions for our esteemed guests are now open and flowing in on the Yahoo Finance community channel right at the top of our homepage. Some of the questions we have already gotten are absolutely awesome, and I plan to use all of them. Keep them coming. Don't miss Yahoo Finance Invest live all day on November 13th. Save the date and tell every single one of your friends, please. All right, welcome back to Opening Bid. I love this work on Costco by city. So on the surface, Costco reported good October sales results Wednesday night. October same-store sales grew 6.6%. Traffic to U.S. Costco warehouses improved versus September. Now, on the surface, things look great for Costco ahead of Black Friday. But then Alice Stevens-Acone caught up with management on the numbers, or did a callback, as sell-side analysts call it. He says Costco called out weakness at D.C. area warehouses because of the government shutdown. He also said there was concern by management on consumer sentiment because of SNAP benefit uncertainties. If you thought the government shutdown wasn't taking a toll, just visit your local Costco and head out the toilet paper and mustard aisles. Chime Financial put another quarter on the board that aims to quiet the naysayers. Chime said third quarter sales rose 29% year over year and active members rose 21%. Co-founder and CEO Chris Britt said on the earnings call, consumers are staying resilient despite high food prices, SNAP benefit uncertainty, and the government shutdown. The company also uncorked a new $200 million stock buyback as it looks to boost a stock that is still trading well below the $27 IPO pricing from June. Chime Financial CFO Matt Newcomb is here for my Power Player segment. Matt, good to see you. As always here, I wanted to start on actually the stock buyback. We'll talk about the results. Like, what is the signal when you come out? You're still a newly publicly traded company. You said you're going to spend $200 million on a buyback. What's the signal you're trying to send to investors?
Great to see you, Brian. Thanks for having me on the show. We had a great third quarter. More everyday people are choosing to switch their banking relationship to Chime than any other bank or fintech in this country. We believe there's a secular shift happening in the way banking is delivered in this country towards a digital experience that is helpful, easy, and free. And Chime is leading the way on that. I think this stock buyback is meant to represent our conviction in our growth outlook. We've had a great third quarter. We grew revenue 29%. We've rapidly been improving our profitability profile, and we've got a great outlook for the future. We beat in Q3, and we raised our outlook for Q4 and full year. So the stock buyback is meant to represent that conviction.
It's hard to understand. You look at this quarter, even look at the prior quarter when we talked, Matt. I mean, the numbers you have delivered really out of the gate since becoming public. Like, what is the market maybe not getting? You know, like I mentioned at the top here, I mean, the stock price is still below the IPO price, but the results you're putting up don't seem to justify that happening.
We feel great about our results. You know, we are beating the street on consensus across the board. We continue to grow our active member base solidly. It grew 21% year over year in Q3 to over 9 million. And yet we're just getting started in a massive market. You know, over 200 million people every day, mainstream Americans in this country who are unhappily banked at the incumbent banking institutions. And so this opportunity that we're attacking, you know, is massive. We're just getting started at Chime.
We heard this week Bank of America decided to finally have an investor day. I talked to Bank of America CEO Brian Moynihan, told me a lot about the AI initiatives they're putting to work in their platform as they try to streamline costs. but take a legacy operation, financial institution like theirs to a new level. How will you be using AI next year and the years to come to drive your business?
We're really embracing AI across the business. You're seeing that from our engineering teams to our marketing teams to our finance teams. It's really starting to have a big impact. I think probably most notably where we're seeing a ton of progress is in our member support function. So now over 70% of member interactions are handled by our AI-powered support tools. That's helped us reduce our cost to serve by over 30% over the last 2 years. But really, this technology is just emerging. It's changing literally every day. It's changing the way that we work, and I think it's going to change the way in the future people get their banking experiences. I think one of the most unique things about Chime that we were excited to announce this quarter is our migration to Chime Core. Chime Core is our proprietary payment processor. It drives cost efficiency, but also drives product innovation and really enables us to embrace the best of AI. So lots more to come on that for us.
Do you think Chime could sustain this 20% plus revenue growth next year?
We have a massive opportunity ahead of us. Again, 9 million members among 200 million people making up to 100K. That's really our target segment. And so the breadth of our opportunity is massive, but so is the depth. We help our members across a number of areas of their financial lives today, but we feel like we've got a role to play in even more: spending, saving, borrowing, investing, insurance, and more. And we're really excited about some of the product innovations we've launched in the market this year. Most recently, Chime Card allows our members to get 1.5% cash back with a premium titanium design. It builds on the best of Chime already, like a high yield savings account, getting access to your pay early, credit building services. And I think we've got a lot more in store next year. Chime Core is really going to unleash this next wave of innovation for Chime. And so you can expect to see things like even more premium tiers, joint accounts, custodial accounts, even investment products. And that's just some of what we've got on the docket for 2026.
Matt, how far do you want to take this platform? And I bring this up in light of, look, Robinhood last night, earnings call, talked a good length about their move into prediction markets. Look at a legacy platform today like Charles Schwab spending $660 million to buy Forge to gain access to private markets. Where else do you believe Chime has a permission to play? Do you want to get into crypto? Do you want to do prediction markets?
Look, there's a ton of innovation in this category, and congrats to Vlad and his team on the awesome results this quarter. Because we serve our members in a primary account capacity, they've come to expect us to help them across their financial lives. And again, today we help them with their everyday spending. We help them get access to their pay. We help them build their credit. We give them access to high yield savings. There's no shortage of other places where we're going to help our members in the future, again, across spending, saving, borrowing, investing, insurance, and more.
We are seeing, based on the data we are able to get, Matt, I mean, of course, the government is still shut down, and we are seeing consumer weakness in a lot of different places. Now, I didn't get that vibe from your call yesterday, but towards the end of the quarter, did you see any shift in consumer spending as a result of government shutdown concerns or SNAP benefit concern? Like, what is your consumer doing right now?
Yeah, there's obviously been a lot of headlines and news and concern about the macro. And the reality is that we're just not seeing cause for concern. We are seeing a resilient consumer. You're seeing spend continue to grow for our direct depositors. You're seeing average account balances that are higher year over year. You're seeing consistent usage of our credit and liquidity products, actually lower loss rates. We are not seeing big signs of unemployment issues in our portfolio. Again, I think what's unique about Chime is we serve our members in a primary account capacity. Our average active member does 55 transactions with us per month. And so we have a pretty good sense of what's going on with the state of the consumer. And a lot of our spend is in non-discretionary categories. That's really 70% of our portfolio. But even in discretionary categories, we're seeing growth. Our members are going to restaurants. They are paying for convenience with DoorDash and Uber. And so we see a lot of strength in the consumer, a lot of resilience, and we got a business model that's also resilient as well.
All right, well, good to hear that, and good to see you again, Matt. Appreciate it. We'll talk to you soon.
Thanks.
All right, coming up, Julian Hyman has you covered on Market Catalyst, and in the 11 o'clock hour, I'll be sitting down with Charles Schwab CEO Rick Wirtz.